This is an uncovered Japan company research report on Ymirlink, ticker 4372. Ymirlink is a Japanese enterprise messaging software company whose QNote platform delivers email, SMS, and authentication messages. The investment question is whether its sticky core and infrastructure upgrade can outweigh a mature email market, thin liquidity, and a controlling parent. At the report's July 2026 source data date, Ymirlink traded at 13 times trailing earnings and 1.55 times book value. Meanwhile, 98.6% of revenue was recurring, monthly churn was about 0.57%, and net cash represented roughly 55% of market capitalization. Those numbers frame both the attraction and the debate. Quality is visible, but the market is discounting real execution and governance risks. QNote is enterprise messaging infrastructure. A bank can send account notifications, a retailer can reach its membership base, and a government service can deliver alerts. The same platform also supports SMS one-time passcodes and other notifications. The important point is that Ymirlink built its high-throughput delivery engine in-house. Reliability and deliverability, rather than low price, are what enterprise customers are buying. The service mix explains the strategic tension. Email delivery produced 78.4% of fiscal year 25 sales and grew 6.1%. SMS and authentication were only 14.6% of sales, but grew 27.4%. The small social and other service lines add optionality. Ymirlink needs the mature, high-share email franchise to fund a faster-growing, multi-channel platform. Revenue reached 3.05 billion yen in FY25, extending an 11-year growth streak. Operating profit rose to 671 million yen, its seventh consecutive annual increase. Net income did fall, but the report attributes much of that to an 81 million yen goodwill write-down related to the ROC subsidiary, rather than a deterioration in the core messaging business. Ymirlink has produced positive operating cash flow and free cash flow every year shown here. In FY25, operating cash flow was 502 million yen, and free cash flow 311 million yen. With an 83.9% equity ratio and no debt, the balance sheet gives management room to fund the platform strategy. It also makes capital allocation, including the use of excess cash, a central issue for shareholders. The moat is operational. Ymirlink's own engine can deliver around 11 million emails an hour and handled 8.9 billion messages in 1 month. It serves more than 2,800 active contracts, including enterprise and public sector customers. Mail net revenue retention was 101.9%, and SMS retention 150.2%, evidence that once the platform is embedded, customers tend to stay and expand usage. Management's long-term plan targets roughly 4.9 billion yen of revenue and 941 million yen of net income by fiscal year 2030. The practical near-term issue is an infrastructure migration. Management expects the cheaper foundation to cut 300 to 400 million yen of annual cost once complete. Fiscal year 2026 is deliberately investment-heavy, so investors should watch whether this temporary margin pressure actually converts into a more profitable platform from fiscal year 2027 onward. Ymirlink's trailing price-to-earnings ratio sits near 13 times, versus an estimated 39.7 times for Tokyo growth market IT peers. The gap is striking, but it is not automatically a mistake. The business has a maturing email core, limited trading liquidity, and a controlling shareholder. The valuation question is whether the discount is fair compensation for those constraints, or too severe for a recurring revenue and cash-rich SaaS asset. The report's FY 2028 scenario analysis makes the dependency explicit. The bear case, with weaker growth and a lower multiple, reaches 1,036 yen. The base case is 1,939 yen, and the bull case, 3,259 yen. These are estimates, not price targets. The indicators that matter are margin recovery, service line growth, migration progress, capital returns, and any action by the controlling parent. To sum up, Ymirlink combines a high-retention messaging franchise, a debt-free balance sheet, and credible growth options in SMS and authentication. Its discount reflects genuine risks, a mature email core, an investment cycle, a 51.8% controlling parent, and a very small float. For investors following the story, the most useful signals are operating margin, SMS growth, migration milestones, capital allocation, and parent company actions. This is research, not investment advice. For a much deeper look, visit the free deep dives at uncoverjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.